Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's January 24th. This will be our chart lesson for the day. And I thought I'd start out by showing you the daily chart with the envelope bands on there. Normally, when you get down inside this purple and close to this brown line, you're in very oversold territory, and you're going to bounce pretty soon. But as you can see, in this case, we look how far we've dropped here. This is very unusual. This is not normal price action. This thing was severely oversold, and you can see we rallied off those lows and almost closed on the high today, and not far off of it considering how far down here we were trading. So are we going to reverse now and trade back up? It's hard to say because, again, this is not necessarily normal price action. There's a lot of things going on. There's some posturing going on by political stuff with Russia and the Ukraine and China and Taiwan, and then you throw in all the other COVID and all the issues we got here in the country and the economy and raising rates, and there's just a lot of unusual things going on at one time. And so it didn't surprise me that we rallied today. I really thought we would rally earlier than we did because there was a large gap on the chart. I'll talk about that when we get over there. But I did want to show you this just so you could see how far. I mean, when prices got down in here, people are just going to buy because there's previous support and we're so oversold. So people are going to start nibbling, and once it starts rallying, more people jump in and start nibbling, and next thing you know, we're rocketing up. And that's what happens. Even if this thing is going to continue down into a huge bearish situation, you will still see rallies like this that just have lots of momentum, and they rush up and then they run into selling again, and it turns right back down and the downtrend continues. So this kind of reversal is not necessarily unusual, but I mean, I don't even know how many. The low was 42.12 and the high is 44.27. I mean, that's 200 something points. That is huge and very unusual. So that's not a normal day in the ES. There's a little look at it. We were really sideways, so this will probably act like a failed break out of this sideways stuff here, and we may come back up and test these lows and turn down again, or we could rally out here because even if we come back and test these lows, we'll probably be still in oversold territory. So it's pretty interesting. As day traders, we don't really care because you had a great chance to short this thing all day. There wasn't as many opportunities to buy, but there still were some, and you could get a lot of runners today. So we can still make a lot of money. I don't like it when we have a sell-offs because it affects my other investments. And so, I'd much rather see the market rallying, but technically as a day trader, we don't care because we just want prices to move and we can make money. So I got mixed emotions about it for that reason. But anyway, let's go over to the 2000 tick chart. Okay, here's our chart. We had a big measure. We had a big sell-off early on with a leg down, and there's actually a couple legs within that leg. And then we corrected here, and once we started down, looked for a measured move, and you can see we actually overdid that by a little bit, but it's such a bearish day, that's no surprise. There's the yellow channel, and then we kind of folded over. That's way too steep into this channel, which is still a little too steep. And prices tried to correct, and we ended up making that measured move down. And then once we got our two legs down, we bounced, and you got two legs up, which were overdone. Come on here. We're overdone to the upside now as well. And that's how I saw it. And really, if you look at the big picture, you could almost call this, I would probably call this a reversal day. Even if we don't continue higher, I'd still, trading down that strongly and that hard, very rarely are you going to turn right back up and trade up that strongly and that hard and take it all back. Not 200 points. Generally if you get a 75 or 100 point day, prices are closing on their lows. And so for us to get 200 points down, I mean, it's just way over. It's just too much in one day. And the smart traders that can keep their wits about them know it's, hey, we got to start buying down here. And I'm not telling anybody to do that, because you only want to buy when the chart tells you to. But not everybody trades the same way we do. There's some people that just buy based on momentum, and people that buy based on being oversold or overbought. And there's validity to some of those ideas, but you're gambling still, and we're not gamblers, because if you gamble long term, you're not going to make money at this. And I had somebody email me today. It said he started following some trader that was making 15,000 a day, 20,000 tomorrow, and he said he was just killing it. And he started trading with him, and for a couple of days they did good. And then he had one loser, then another loser, and then another loser. And next thing you know, they'd given it all back, probably plus some. And that's what happens with strategies. They don't work. Yeah, you might find a strategy that works for a little bit and carries you for a bit, but eventually it will lose, and you'll lose everything you made plus some. The only thing that's consistent is trading, is following the price action and let it tell you, and trading that. And that's the only way to make money long term. That's my personal opinion. You may disagree, but that's my personal opinion. And I also believe there are people that trade and don't call it price action trading. But if they make money consistently and they're truly profitable traders, they understand price movements, and they understand how to read this chart and have a good idea what prices are doing, or they wouldn't be making money. And that's just the bottom line. So I'm going to zoom in here, and we're going to go over these trades. And 7 o'clock came way back up here, but we were right at the lows, and then we're just kind of working sideways. You don't want to go short into that. And you actually could say, hey, there's a failure right here, a failed second entry long, but it's too far away from the EMA, and you're going short at the low of the day. In hindsight, yeah, it's like you look stupid for not taking that trade. But the next 9 times you try that, it'll fail on you. And that's why you have to get used to the market and understand price movements, because yeah, that looks like a great move, and it was a great move. But the next 7 or 8 times you try it, it'll probably fail. And that's what happens. Somebody will see something work, and they take it, and they reinforce bad habits, and then they think those ideas work, and then the next thing you know, they don't work. And because the market switches gears a little bit on them, it reverses, or we start going sideways, or we've been going sideways, and suddenly we start going, we're trending up or trending down, and the only way to do this is to understand how prices move, understand the price action rules, and understand what they're telling you, and then you can make money at this. But let's get to the trades. We dropped on down. We bounced right off the midline. We get a first entry. You get a second entry right there, but you don't really get a close outside. It does break higher, and then you get this big bearish bar. I marked that one as a possibility because this is also a little bit sideways, so you might have traded this as a breakout. I didn't really draw it that way. You can see there's a little channel, sideways, congestion, whatever you want to call it, and you got to be real careful trading that. This is a breakout, and it fails and gives you this big bearish bar, so you might want to trade that back, but generally you're better off to wait on a lower high, and that comes right here, and it does come right off the key entry point and the EMA, and you get a fairly bearish bar. Just make sure your entry, you got enough room to get out. So if you went short right there and you didn't have room to get out, you'd have to let it break lower and drop a limit order. But I'm pretty sure there's room to get out on that one. You just have to measure it, but just make sure there's room to get out before those lows here. And if you catch that one trade today, you might have been done. I mean, that one trade right there is, let's see how much, there's 1,300, there's 27 points there basically. So $1,400 almost on that one trade for a single contract. So you don't have to get but 1 or 2 of these with a runner, and you've made an incredible day. and really there wasn't a lot going on from that point on, because we're just going sideways here, and it's hard to know. We know prices are probably going to try to test this low, but it's hard to time this to know when they're going down because it's just going sideways. So anyway, we dropped on down. We made a new low. You get a first entry. Technically, there's a second entry right. Does that make them 2-bar matching low? Actually, it doesn't. It actually makes it a little lower. So that's really not. I wouldn't count that as a second entry anyway. But if there's a 2-bar matching low, technically you could count that as a new low. But you get your first entry and then you come back, and that's a second entry short. It actually breaks higher and turns down. Generally, I would say you needed that to be more bearish than that because it doesn't quite close in its lower half. But notice here you get a first entry and then you get a second entry. So when that breaks lower, that's a failure. And this is the first break, and it's a double top. It's a lower high. I'd still call that a double top, but that high is lower than that one. There is a little room back to the EMA if it breaks lower, and you can see how it kind of took a little minute to work through there. So just make sure you probably want to let this break lower and then drop a limit order, maybe a couple of ticks up. Just make sure you got enough room to get out before that EMA, and you could have gotten filled on a limit order a couple of ticks back, and then it ends up not mattering because the bottom drops out of it and it goes on lower. And then of course we bounce at the lows we just made, and this is just sideways. It's working higher, but there's too much sideways in here. Just be really careful. I don't see any reason to go long here yet, but finally we make a failed breakout and we make a lower high here, and that's a very bearish bar. It's not a great setup again, but odds are if we break lower there, it's probably going to try to drop on down. There's plenty of room to get a couple of scalps out of that, so there's no problem with the room there, but it quickly bounces, and it's just not a great setup anyway, and that's why I marked it green. But I wanted to talk about it because I figured somebody'd ask me about it. But you can see we're just kind of going sideways here. Prices really don't know what they want to do. We break higher here, and again we fell on the breakout. Always wait on a lower high, especially when there's no consistency here. You notice we had a little consistency going on here, and then we broke higher, and then we made another higher high. So there's no consistency after that point. And the only reason you didn't want to probably take one of these trades, actually you might have taken this failure when it broke higher here. I don't think I would have waited to go short right into that midline, but you might let it break when it went by. You might have went short right there and just tried to get a little out. I didn't mark it, but I know somebody will probably ask me, so that's why I went back and mentioned it, because I meant to talk about it. Usually I'll put a green arrow there if it's something I really want to talk about, just to make sure I don't forget it. But that fails, and you finally get a lower high here, but it's so congested. But the reason I like this one is you got a triple test right there, and it's right inside that resistance that holds. And look at that bar right there. That is just so bearish. Just go short right there. And if you wait just a minute, if you don't like that one, you get a failure here, because that's a new high. You try to go higher once, twice. It doesn't quite get back to the EMA, but it does confirm that trend line. And this has been a strong bearish day, and we're going to try to go back and test this low. So if you get the right setup, and you can see the bottom just falls out of it. You don't know that that's going to happen, but you would think here that you're probably going to come back at least test the midline. But notice how we went past that the last few times. So eventually prices are going to come down here and test these lows. On a day that's bearish, you're going to at least test the lows, and you might get another leg down, which is what ends up happening. We get that second leg. We drop on down here. Notice how we didn't, it depends on how you draw this, but you don't have a lot of price action down here to go by, but we do bounce right there, and then you get a close outside, and there's a second entry right there, and that's really tempting. And if you took it, you probably would have got stopped out, but that's why you draw these trend lines, especially once you've got a new low in place. That's the real issue here. So I would wait on a lower high, and you never get one. You get one, but it's not a good setup. So I want to make sure I say that, because sometimes people say, well, yeah, we did get a lower high. But when I say that, I'm saying you don't get a lower high that's tradable, that's a good setup. So don't confuse that. Yeah, but somebody asked me that the other day. He said, you said we didn't get a lower high, but we did. But if you looked at it, it was a big bullish bar to go short or vice versa. I can't remember the exact trade. But anyway, just make sure you understand what I'm saying, because sometimes if you hadn't been around, it may not make sense. That's really tempting to go short right there, but I would wait. And then you do get a lower high. It's like a breakout pullback. But we've already got that low in place. There's probably enough room to get out here, but you're really pushing it. If you took that trade, I probably wouldn't fault you for it. And a big down day like this. Oops, I didn't mean to grab that. So maybe you take that trade. There's a failure there, and this usually you want that to be back to the EMA. But I might could live with that if there was room to scalp out of it, because it's off the midline. But there's not room to scalp out there, I don't think. If it is, it's pressing. It's really close. And the fact that this one didn't, if it would have broke on lower, but it doesn't, it gives you an inside bar. Now there may be room to scalp out there, but now you've got 1, 2, 3 bars right inside that bar, and that's never a good trade. So just skip that. And of course it bounces. You get an overshoot of this channel, a break, a move to a new high, and that's also a second entry. And so I liked taking that one. It actually breaks higher and turns down. And being that far away from the EMA, there's times you'd probably wait on a lower high there. And then we try to go higher once, twice, and failed. That's too congested. I don't really like that, but I did mark it just simply because there's a failed second entry there, and it's probably going to trap some traders. But you can see it would have worked, but it didn't go very far before it bounced and then went down. And so that's the danger there. It's just not a really good setup. Again, I put that on there just because I didn't want to forget to talk about it. It is a failed second entry long, but that's just don't take that trade. Then, of course, we dropped down. And even though we made a new low, you could still look at that as 2 legs back, but it doesn't turn down right off the EMA. So I would wait on a lower high, which comes here, and it's not a very good trade, not a good setup. It's too congested. And then you get a failure here, but it's right into a triple bottom, too much support. And we do drop on down, and you finally get a first entry, and you get another second entry right there that fails, and then you come back and you get a failed second entry long. Now I marked this one. The difference here is now you've got a confirmed trend line that you can clearly see there, and you made this high. You tried to go higher once, twice, and you actually had a second entry, and this would be considered a lower high. It is congested, but you got room to get out this time, and this is a very bearish market, and you got the failed second entry long there, and we actually tested that midline 1, 2, basically 3 times. You really tested the EMA 1, 2, 3 times as well. So there's a couple of double tests in there, triple test, however you want to call that. And it is a second entry short. Technically it's not, because we already had a low here. So it's like 2 legs up and then a lower high, but it's congested. But there's no rule that really says you can't trade congestion, so I want to clarify that. But most new chart traders are not good enough to understand why the congestion forms, so they're better off not to trade it. And so I usually say don't trade congestion. But if you understand what's going on right there, you probably want to take that trade. What it is, we've still got, people are bottom picking, but there's just too much selling coming in to get through that EMA and that trend line, and for long the sellers take over. And by the time you've tested something 2 or 3 times and it fails, it's going to go the other way in most cases. The problem is that sometimes it'll go and it'll break out at the below and then fail and turn up, and you see it try to do that there, but the selling is just way too strong. Real strong sell-off day. And that turns out to be a great trade. You probably get a runner on that maybe. depending on how you trade it. And then we bounce here, got a little channel working up, close outside, new high. Uh, it does break lower and then it turns up. But the problem is that's a first entry, second entry, third entry. So you really got to wait on a lower high here. And that doesn't come till here. And you might have said, hey, that's a first entry, second entry that failed. But there's been so many good trades. I just don't see a reason to tempt that. That really looks like sideways with a new high right there. Um, So again, if you took that, what I would do is wait on this bar to close, and if it broke lower there, I would probably take it, but then you get an inside bar. And so that makes it suspect. But if you notice it comes back and it really makes a triple test there and gives you a very bearish bar. So you might take that one. I went back and forth whether that one should be maybe green. But when you try to go higher multiple times and find that, you can see there's resistance all the way across there. And then basically you can't even get back to that, so it's almost like a lower high, but it's like a triple test there as well. I'm pushing that one a little bit, but this has been a downtrend. I'm just going to change that one to green because that's a little more advanced. And you see it wasn't long before we bounced, so that's what you got to be careful of. And oh, the other thing I meant to talk about too was we had what looks like we just came off the lows, but it was really hard to know if that was a low. It looks like it based on that midline, but you really don't know if that's the lows yet or not. And that's the other thing. We might have had more room to go down, but you don't know that, and it turns out we did, and we come back. And I marked this long here green because you would expect prices to turn down here. There's actually this is basically a double bottom, so this is truly a first and a second entry and a big bearish bar right at that key entry point. So far away from the EMA, it's a little risky to take that trade, but you may take it. And then of course it bounces once, bounces twice, and then you get a failure right there. And I guarantee you, off that key entry point, that many failures and all these stems down here, even though that's congestion, if that breaks higher on that failure right there, when that breaks higher, it's a failure, you're going to get an easy scalp out of that. It's a little aggressive, and you really need to know what you're doing. I marked it green, and you can see it took off. You wouldn't have got much of a runner, but I mean, I don't know. That's probably bigger than you think it is. I mean, see, that's 5 or 6 points there. 5.5, almost 6 points there. So that's an easy scalp, and you can see how it rockets up, but then it runs out of momentum, and it's really hard to know what prices are doing here. I don't like trading any of this because it's just hard to know what's going on there. And you can see, and finally it sells off, and you think you're going to get a chance to go lower. There's actually a strong second entry right there. Notice that low, and you get a first entry. It's such a bearish bar. And that's such a strong move down, but we didn't quite get back to the EMA, and that almost looks like there's a hidden second entry already. So it really just kind of looks like one leg up and then a little two-legged correction. The other thing was it didn't break lower right there. As bearish as that was, if it was going to go lower, it should have broke on lower, and it doesn't. It creates that little two-bar matching low, and so that's the reason I didn't like that trade. If you took it, it worked, but hopefully you see that inside bar, and you got to be careful. Those inside bars are very unreliable. And if it made a matching high up here with two big bearish bars, yeah, maybe you take it. But you see it's not long before it's rocketing back up again. And you get a break and a new high. And I only like this one just because it broke higher first and turned down that far away from the EMA. The momentum is probably going to take you on down. Once this closed, I don't think I would enter there one tick below that because that's just not, that signal bar doesn't close very well. So, but this one to consider. It's aggressive, not great either. Same thing here. You basically got a double bottom first entry, second entry, and then maybe a lower high. But the main thing is you got a new high, first entry, second entry, and it's a failed second entry long on a very bearish day. And there is room to scalp out there. Again, it's not a great setup. I marked it green. And there's probably some others in here you could argue that look very similar, the same kind of setup, same kind of deal, like right here. But I just, you're getting, there's just so much good price action. Just wait, be patient till you get a good setup. And so I don't like anything in there. Maybe that one right there, just simply because it's a lower high off that resistance. But you don't have a lot of room, and it's really only the first two swings of the this yellow channel. So you really don't have that channel. You just have sideways action. So if you took that one, yeah. And then of course you confirm this trend line now, but look at all that congestion. And I just, we've been bouncing early here, so I just don't like it. You drop on down, you get a first entry and a second entry. Again, it's a very nice bar. And it is the third touch, but it's hard to know if that's really a confirmed trend or not. And so with that being congestion that far away from the EMA, I'd skip it. It does drop on down, turns out to be a pretty good trade, but you get another chance here. This is congestion with the failed breakout, and you're going to expect prices to make a new low here. And that's right off the EMA, right off the midline. We haven't reached the lows yet, and that turns out to be a great trade. I mean, you're just really trading the little range rules here, trying to get a scalp out of that. But since it's such a bearish day on a failed breakout that you're entering back with the trend, you may try to get a runner there because you would have got an easy one. Lower high here, but again, I think that's too risky. Of course, it bounces down here. I don't think you want to try to go long though. You get a close outside the new high, so that's another one you might consider. Problem is the first entry and it's still above the EMA. There is room to scalp out. Yeah, maybe you take that one, but I think you're better off to wait. And of course you'd make a higher high there, and then you just got congestion. And again, it's hard to know what's going to happen until it comes back here on the failure. And this is just a breakout pullback short, and you got to be careful with those. But this is a downtrend, and you got a high, you try to go higher once, twice, so that's a failed second entry long, relatively bearish bar right off the EMA, a retest of the breakout there. You got enough room to scalp out. You're probably going to get a scalp out of that if nothing else, and we're probably going to drop lower, and of course there it goes. You don't want to be these are all too far away. Just first entries, nothing really happening here. We bounce. You actually get I think that's an overshoot. I mean, maybe that's two-tiered, but it really looks like an overshoot to me. And you get this lower high here. I marked it green just simply because it looks like we're going lower again, and you may get a second leg down. It's not a great setup. I mean, there's just so much price action here and so many trades, and really from about that point on, I didn't see a lot of trades. I think I marked a blue one here, and then we're sideways here, and I mean, this afternoon was really hard, and we had a great rally. But if you catch that one trade, you get another runner, and even if you only just ride that move up, it's 20 points. So you only needed one or two trades today. But again, I don't see anything here I'm liking to the upside. At this point, it's hard to know if we're still going higher. You finally draw this trend line here. You get it confirmed here, but no setup. But then it comes back and gives you a failure. So if it breaks higher there, they got shorts trapped, and it's probably going to rocket up, and that's exactly what happens there. And that's why you get a 20-point move. On a $200-point day, 20 points is not much. And of course, you get your first break, and that's actually a second entry, but it's at the EMA, and we hadn't quite got to the highs yet. Um, so if that had a decent signal bar, I'd have probably marked it. But I just don't like that signal bar. And of course, it moves on up, and we never get up there. There's your clue. Notice we couldn't get up to the high, and then we couldn't get up there again. And then that's a clue we may break here. You don't really get a setup to trade long here anyway, and then the bottom drops. You might have said, hey, there's a first entry, second entry, and there's two legs there. So it's one leg down, two-legged correction, second leg down. But that signal bar is not good enough. So, and then it drops on down. Now you got a little channel working down. You get a close outside. It tries to make a new low, and there's a reversal pattern here, but you're below the EMA, and then you're just working sideways. Again, I just don't see any reason to try to. It's hard to know what prices are doing here. The momentum looks to be running out. It doesn't, however. It continues higher, and you do get a channel here, but again, you don't really get a setup because you got this channel working up, and you get a break, and now you got a new high, and so you need a good setup, and you don't get one, and they just keep running stops is what they're doing here. The higher it goes, the more people say, I got to get out, or I'm going to lose all my profits, or they've got short way down at the bottom, and they can't take the pain anymore. And so now you got a break of the blue channel, a huge move up, a lower high, and now we're working down again. And you got to be careful getting short here. Here you finally get a second entry short with a nice bearish bar. I think you got to take that one after getting this big leg down, because you may get another leg like it. And you can see we got almost a perfect measured move before you get another nice correction. And this is two legs back. But I'd wait on the lower high, and it comes here, and that's not a very good setup. But then you get a failure. So if it breaks below there, you'll probably get a scalp out of that. Drops on down and just starts working sideways again. But notice you got a break of the blue channel, move to a new low, and that's the first. This is a little higher here. This actually confirmed that channel, and then you get a break. So it makes you question if it's valid or not. I believe it is, because you can see that midline working all the way through there. So with the break of this and the new low, and then a trap right here, notice the new low, try to go short once, and you push through the MA and you pull back. If it breaks above that bar right there, it's probably going to shoot up real fast. And you can see that trap catches them, boom. And there's second entry long there, but you can't trade that inside bar. Then you actually could count that as a first entry, second entry, but too congested. You should look at that like a little tight range. And I don't see anything I'd risk there. Not with all the good trades we're having. Runs on up, comes back, and more congestion. And you're just not getting any chance to. That's the first break of this. Well, we didn't give it a color. We'll just call it yellow. First break it. So you're going to get a new high, but you don't get a setup for it. And then now you're at a new high. This is one that was considerable. I mean, you might consider that I looked at and thought, yeah, possible. But notice you made a new high, first entry, and then you're way away from the EMA on that second entry. It's a little risky, but prices are probably going to snap back, and it ends up being a nice move back. So I didn't mark it. I don't think I'm going to, but it's something you could consider. And just sideways, you get a little, again, you got a little range right there. You fell out the bottom, then fell out the top, and then you just make kind of a measured move down. And it bounces and goes higher, but that's after 2:30, so I didn't mark anything after that. So interesting day, really good morning, few good trades in the afternoon. But this was an interesting day. And as we talked about, this is not normal. And I'm 35 minutes, so I'm not going to beat around the bush. I'm going to wrap this one up. We'll be back again to do it tomorrow. We'll see what tomorrow brings. But hope you had a good trading day. Be careful in this stuff because you can see it looks like, I mean, 200 points down and then 200 points up. You know, you can't afford to try to ride anything out. If you're wrong, don't make those mistakes because that's not only can you wipe out an account, you can wipe out more than an account. So just be careful trading this stuff. Follow the rules. No, you probably can't use an 8-tick stop rule, but put your stops where they go, 1 tick above or below the signal bar, and don't move them. And if you get it right, you're probably going to get a nice move. And if you get it wrong, you take your hit and you live to fight another day. So anyway, this is Mac with PriceActionTradingSystem.com, and we'll see you next time.